All right. I don't know. We might have too many to go through, but I don't think it's that many. All right. Okay, no problem. Okay, some of these you should already know the answer, but we'll do them anyway. Okay. All right. So first, okay, you should have the daily and the 5 minute here. Okay. First, let's just do the FTR. What is the strategy? How do I know if I want to go long or short the FTR? What is the strategy? Pro gap. Yep. Yep. Okay. Good. So I'll just first person to get it. That's true too. Not excessive, which was really good. Capping right to the resistance. Really good. Okay. Now on the entries, usually the entries there's usually more than one right answer. Okay. Because sometimes it may be a breakout on one time frame inside of a larger time frame sell setup. Okay. So FTR, what is the entry? Just give me the time frame and the pattern. Okay. The numbers are 303 by 290. If this had waited any longer, you could have said 5 minute 1, 2, 3, but it didn't set up. It didn't wait. If we didn't get that inside bar, otherwise you could have had it. So it's not the 5 minute. What's the entry pattern on this? I'm not showing it to you. I just want you to tell me if you have your platform up. So entry pattern tells us when we get in and how much. $173. Okay, that's a good answer. So let's see. Yeah, this is the 1 minute. Good. I'm glad we're getting some different answers. So on, let's say, a 30-second time frame or something like that, could this have been a breakout or could this have been a pullback? Yeah, maybe. And that pullback would have held. Okay. So it did kind of give a little bit of a pullback, not a fully formed pullback. If this had maybe put in some more inside bars here, and then we could have played it as a pullback. Now, generally in the first like 5 minutes of the day, I typically want to have the entry be as close to a high-low kind of entry or making new highs, new lows as much as possible because the volatility is high. So it's easy to get kind of shaken out of stuff. So I want as much as possible for this to kind of prove to me that that's where we're going, right? So as far, yeah, I'll try to give you the numbers every time. 303 by 290. Okay, so pullback I would say is not really fully formed here. We want 3 or more lower highs. Sometimes just 2 lower highs is good enough. This one we only get 1 lower high. So this, while the idea is there because this did retrace from the top, I would say it's not a fully formed pullback. Okay, and then if you wanted to do a 2 minute high low, that is okay. Okay, you would result in a bigger stop, and you typically don't want it to be a wide range green bar if you're going to play a 2 minute high low. That's a good question on the stop. So we'll go over that too. So a high low, for instance, it just is you get a pattern and it's fine. You want to basically the break of the opening range. Okay, so like on this MYL, this is okay to play as a 2-minute high-low, but the stop is really big is the problem. Okay, the yesterday, here's a good one, the MNK, okay, as a high-low. Now, what you want to see in the high-low is evidence of two-way trading. Okay, what does that look like? Could look like a lot of things, right? The only thing that it won't look like, basically anything else that isn't just a wide range bar that opens at one spot and closes at the other spot, right? Like a solid bar, is evidence of basically one direction trading. Okay, what we want to see is two. So we know, or two-sided trading moves in both directions. So if we look at the way this bar was formed, right? This bar could have gone up and formed this topping tail first, could have gone down and formed this bottoming tail first, right? Or sorry, it actually opened here. So it actually could have gone down, came back up, and then closed here. Based on the red body, most likely it tried to go up and then came back down and then closed here. Probably what most likely happened on this MNK. Okay, but anything could have happened in here. We don't really know unless we go to the 1 minute to get more information. But this is fine. If you get a doji bar with a closed body there and just wicks on either side, that's good too. Okay, in the case of the MYL, we know that this tried to go up and then also came back down. So we know that buyers and sellers both stepped up. Okay, so those are the kind of high lows we want. We don't want just a solid bar in one direction. Okay, let me see what this GCP did in the morning. And let's see. Yeah, I guess it did come in first. So let's see what else we have. Okay, what about this? What did this PGTI do in the morning? Okay, so this is not the kind of thing you want to look to go short, because this is a big wide range bar. Sellers are already getting paid, probably looking to take profit, right? Okay, so we want to see two-way trading, and then you can play the break of the low if you are bearish on the play. Okay, now on the stop for the FTR, you could have used 293. I think it was 294, wasn't it? You could have used this bottoming tail. 294. You could have used this. Is that what you're asking? Why not use this bottoming tail? You definitely could have. I think I was trying to find a way into the MYL, and I saw this little shake, and I thought, oh, okay, as long as it doesn't take this out, then we're good. But I already had the order in the system, but you could have used 294. Let's see, what is this? 293. I would say you could have used 294. 293 is okay, but I mean, at some point you're just splitting the difference, or it's just like it's just barely any different. Yeah. So this is, yeah, to me, this is the most recent showing of support. Buyer stepping up in the face of selling. So I think this was fine. You could have used 293. Then it would have been a 10-cent stop, and then you'd be looking at a 4R play, maximum 4, yeah, more than 4. All right. And so 2-minute high low, I would say it would be a bigger stop, not as the way that I'll look for it. I think that would be too big of a stop. And then 2-minute 1, 2, 3, 4 is probably good. Yeah. 2-minute 1, 2, 3, 4, that's fine. If it had gone from here, right? This is why there's multiple answers. If it had gone from here, you could say 2-minute 1, 2, 3 or 1 minute breakout. All of the 1, 2, 3s will be a breakout or breakdown on the smaller time frame. So what I would do is make sure that you're really picky about the stuff that you want to play at the open. So you know how Sammy always says you can really only focus on one thing? I think it's true. If you start to move around too much, it's easy to start to go after the wrong stuff. And then the thing with the open is that sometimes when things don't work, you end up losing more than an R. There's just no way around it. I mean, are going to have the highest move because it's the time period of greatest volatility. So it goes both ways. Some of your biggest winners will be at the open, and some of your biggest slippage will be at the open. So it's up to you to decide how you want to handle that. What you could do is undersize at the open a little bit, because the ones that work should work just fine. The higher Sharpe ratio will make up for some of the losses, and then you don't have to have too bad a big slippage to take you out of the game too early. It depends. I think it depends. We'll look at some more plays, and we'll just take a look at them and see if there's kind of more to glean from them. Okay, that's what you're doing. Cool. Okay. All right. So now CPB. Okay, what is the strategy first? And then I'll give you what the numbers are. Okay, so we'll look over here first. CPB, what is the strategy? So what's telling me if I should go long or short? Gap fill would be, I think, more a part of target picking, at least for me. Novice. So if this were a novice gap up, we would have to play it short. So I don't know. Maybe somebody could have snuck their way in and played it lower. For me, this is a pro gap. Okay. So let me grab. It is an island reversal. Island reversal are always going to be pro gaps because you're gapping against the recent move. Okay. Okay, but what does narrow body bar? No, the answer is it's a pro gap, so we should go long. So we're not. So novice gap, this is a novice gap. Novice gap is the shoot, just had it. TGI. This is a novice gap. Okay. Novice gap means, so when we look at the gaps and we're looking at the strategy, we can talk all about like how the bars are formed, how it gets there. But the question, let's just say we want to simplify it and we want to ask just a simple question. If we're talking about a novice gap, are traders looking to take profits? Yes, wide range green bar and extended from the 20 MA and yeah. So this is a good novice gap. The question you want to ask, are there people here looking to take profit? That's what I want to know. So when this is going to be opening at $23, do I think there are people going to be looking to take profit? That's what you should be asking yourself on a novice gap. Open at whatever, 23.40. Okay. On a pro gap, the question you should be asking yourself is, are people trapped? Are there people trapped? And so when we look at this, and trapped means, right, they're in a losing position. It's been selling, had the gap down. These are wide range red bars. We didn't recover these red bars, right? So this is pro gap. Okay. Okay, so the numbers on the CPB are 34.90 by 34.45. So can anyone tell me what the pattern is? Again, there may be different answers, right? I think I rounded up the entry a little bit, but I have written down 34.90. I'll give you guys a second to find the numbers, and then tell me what the entry pattern is. Okay, green, red, wide range of bars are next to each other. Wait. You saying this? No, we're talking. This gapped up today, right? So we wanted to play along today. This. While it was green at some point, eventually sellers did step in. So unless it closes as a significantly green body, so this to me is more of a neutral, that buyers tried to move it up, but there were almost equal sellers from the open. So really, I think sellers are in control prior to this day. All right, so we got our entry patterns in here. Okay, so now red bar ignored. Yep, that's part of it. Okay. So 34.90. Okay, W bottom entry at 34.90. Okay, so I would take either 2-minute sell setup failure or 5-minute buy setup. Okay, you have a retracement here. Look, you could actually be in as early as this. So really, you could do 34.71 buy. That's just a pullback. 5-minute buy setup. Now, it's in the first 30 minutes, so it's okay that it's extended. Okay, in the first 30 minutes, right? What are the time frames? Or say we just crossed 10 o'clock. What's the time frame that we're on? 2-minute. Okay. So is the 2-minute extended? No. If you have a cleaner pattern on the 5 and the 2 minutes not extended, nothing wrong with using the 5 as long as the 2-minute, because this is the time frame that we're focused on now. Okay. So why would I wait for this, right? Why would I wait for it to get over 34.90? Because 2-minute buy setup here failed. Well, I guess it didn't fail. Didn't fail, but this one did, right? Here's a high, lower high, lower high, lower high, lower high. Buy setup triggers, fails. This one looked like it may as well have failed, pretty close, but stop. So this is your W pattern, right? And the neckline is 34.90. It's the same thing. I mean, like the cup and handle, right? The cup and handle is just a higher low, right? After the rounded bottom. So it's like all the same, transition higher. Yes, the 20 MA, that's correct. So that's the one we use to see, okay, is it extended or not? Right, so 2-minute, not extended. Okay, good job. Okay, I want to find something a little bit different. Okay, so 26. Okay, let's do this one. Preferably, yeah. Preferably, yeah. Oh, you mean like this one right here? Here's a high, lower high, lower high. I guess that 3501. Yeah, I guess it made a new high by a penny. Yeah. I don't think I wouldn't play this buy setup. I wouldn't play that buy setup. So, yeah. I guess you don't, maybe the buy setup you can say didn't really form before moving lower. But either way, I know from looking at this that people tried to support this up higher, right? This bottoming tail, and then we got some green bodies, right? It's trying to move higher and then got rejected. So, yeah, I think you're right, Mustafa, that the buy setup here wasn't a good formation. I don't think anybody really is going to be going after this on these kind of biceps. Not after this run up. Level retracement is really shallow. And then, so I just know that sellers step up here. That's what I've seen. Sellers step up, and then we created this topping tail, sellers stepped up. So I want to get over that area so I know that buyers are back in control. Okay. Yeah, good point. All right, let's look at the RLGY. Okay, this is from yesterday. Okay, so first, RLGY, what do we have here? Pro gap or novice gap? Pro gap. Yeah. So I know that it's coming from a wide range red bar. So this sometimes if you get kind of in like maybe just too focused on this previous day's bar, you think maybe that this looks more novice. But how much damage did this red bar really do? Right? It didn't break any pivots. And you can see the uptrend is actually still intact. Not until we get the pro gap, right? And then not only that, the pro gap gets upgraded because it clears this pivot. Okay, so it's a good pro gap, especially once this pivot is out of the way, right? And we're looking for at least retracement to this pivot low. Okay, so right, so pro gap. You are correct, David. You are correct. That's why, I asked this question. I was like, when's the last time someone called a novice gap an official play? I couldn't tell you. I mean, that's why I know, that's why I keep that example of the TGI, because I don't really see that many good novice gaps. And especially a novice gap up because market's bullish. So a lot of times they ended up recovering and going higher. Look at this TGI. Did this really come in? Actually ended up basing and then making a new high. So it's hard. It's hard to pick the top, especially in a bullish environment, right? So, okay, RLGY. So we got that it's a pro gap. Most times it's gonna be pro, okay? And especially, I mean, prior to this, right? It's actually above the 20 MA. So it's been moving up recently. So we know that it's going to be against the trend, right? At least the longer term trend here on the daily. All right. So now the numbers on the RLGY, 1595 by 1623. What's the setup? I think there's probably 3 answers for this. Maybe more. So 1595 by 1623. This was an official call from Sammy yesterday. So we know it was a pro gap. We want to play in the direction of the trend. Yep, but give me the time frame is good. 2-minute opening. Let's see, 2-minute opening. 1644 by 1694. This is actually okay. I'll give you that. But this wasn't open. I don't think this wasn't open. You see this? This was not open. I'm almost sure. So 1-minute high-low, you could say. 2-minute opening, let's see. Not sure on that one. So, okay, this is a good example. This is not the high-low I want to go after. Because a lot of times, shorts are already getting rewarded, and you have no reward to risk now. We're talking, I know that like we know that things can go as far low as they want to go, no matter the price. But I mean, there's still a little bit of exactly too big, a little bit of common sense, right? $1.20 stop on a $15 something symbol, you're asking for a lot. You're asking for this thing to drop a lot, like 20% intraday to have like a 2-hour play. So narrow range is much better. So, okay, you see this? This is not, so just wait. Okay, you may not get another entry, but just wait. If you get an opening bar like this, right, this is not the kind of opening bar you want to short. Okay, even if you love the gap. Okay. All right, so base breakdown is correct, Lee. On the 1 minute, we have a base breakdown. Okay. I would also accept 2 minute sell setup. And you could also say we have a base breakdown after a shakeout, right? Breakout, no follow through becomes a breakdown, right? So breakout failure, right? Breaks down, and then you're into it from there. Okay. 1 minute breakdown is fine. 2 minute, look at this sell setup. Is this not what we consider a sell setup? Here's a low, higher low, higher low, higher low, break of the previous higher low, stop goes at the top of that bar, of the entry bar, or the high, whichever is higher. If this didn't do the breakout failure and was a lower high, then you would do it above the previous bar, whichever one is higher. Okay, that's the more secure place to put it. So is this not a pretty good 2 minute sell setup? And it's in the first 10 minutes, so we don't really need to worry about any extension. Gaps automatically will be extended. Level of retracement from the opening range, probably a little bit more than 50%, maybe closer to 60, but that's still pretty good, right? So RLGY, I would take 1 minute breakdown, 2 minute sell setup, probably 5 minute. I don't think I had enough time to do a sell setup. Yeah, see, it didn't have time to do one. Okay, good job, good job. Okay, here's one from yesterday. Okay, we kind of already talked about this a little bit, but I just want to go over because it's a different type of entry. Okay, MNK. What's the strategy here? Right, we're opening at like 24. Yep. And you guys already know the answer. Right, exactly. MNK. Now, there's one other entry, I think, that I don't think I went over in the room. And that is the pullback. Look at this pullback. Now, this pullback moved up a lot. So let's say you think, oh, I don't know if this pullback is playable because it might have already topped out. But the answer is 2 minute high low, exactly, because we went over it already. So what if when you get this, what is this now? All right, what is this now? So if I gave you the numbers, 2536 by 2490, how would you log this? What kind of entry is it? It's a gap. It's still in the first 10 minutes, 15 minutes. We don't really need to worry about it being extended. Generally in the first 30 minutes, it's not. Yeah, numbers are, say I give this to you. Numbers are 2534 by 2490. Yeah, by 2490. Okay. What would be the entry? Or yeah, what would be the entry pattern? Okay, that's completely fine. If you would not play this, then I don't have a problem with it. I didn't play this either. I was out of it and I was done with at least this. Yeah, you guys are correct. I think you mean like or like, I guess it was not really green bar ignored, but pullback is right. And then you got the topping tail, and then you recovered from the topping tail. Okay. So I would call this a pullback, but with a secondary entry. Okay. So what does a secondary entry mean? Okay. Secondary entry for me means that I let the first entry trigger. Okay. I let it trigger and I wait for the reaction. So this reaction created a topping tail. And then now I know that there are sellers in this area, or maybe some buyers felt like they missed the target, right? And so they want a chance to get out. Now, if we get over this topping tail, which we interpret as a bearish event, now we can expect the buyers are back in control. So it is a pullback with a secondary entry. Okay? Does that make sense? I probably have to look for new highs for the reward to risk to make sense. Yeah. Yeah. But on something like this, and you go to the daily, and this was, what did we say? 24, 30 something? Boy, I thought, yeah, we had a lot of room. So stop would be, would either be 24.90. Okay. Let me see if this is any, or 84. You can use this one too. If you want to if you want it to be a little bit more secure, it's 5-6 cents. Right. So you can use this here. Honestly, I would probably, if I were looking to play, I'd probably use this one. Because the last thing I want to see is make a bottoming tail through these bars, and then not get through this after it triggered, and then go back higher. So that, the putting myself potentially for that scenario to happen, I'd much rather just put it here. Now, if this triggers and whatever triggers, and then breaks this, then that's fine. Because why? Uptrend is over. What did we just do? High, lower high, a low, and if we break here, we actually just made a lower low. Okay. If this starts to go in a downtrend, then we'd have to see the same transition that we saw on the CPB. Okay, because the CPB, right? Was that? Yeah, no, today CPB, right? So let's say you're looking to play this. Now, this retracement even worse than the MNK. But let's say this did a buy setup, right? And then failed. Okay. I'm not going to want to play it long until I see a sell setup failure, right? We're in a downtrend now. Here's a high, lower high, lower high, low, lower low. We're at downtrending, right? We're moving from up here, upper left to bottom right. Okay. Now, what happens when we do this, right? And we go up and we break here. We broke the downtrend because we just put in a higher high and a higher low. So this transition, right, inside of a 5-minute buy setup, right? That's what I was saying. I would probably call it like 1-2 minute sell setup failure inside of a 5-minute buy setup. Right. And we just want to make sure it's not extended on the 2. Okay. How about, this is the one that we've seen a lot of lately. I'm getting more and more of these, right? The IMMU. 1640 by 1625. Or wait, no, 16. I must have wrote the, oh, okay, yeah, this was for, this is a different play. Okay, so this one here is going to be what strategy? IMMU. I'll give you the number so you know at what point we're looking for it, okay? But that'll pretty much give you the answer there, okay? It's going to be 1503 by 1480. Now, I tell you what, like I totally missed this because I moved it. But I can almost guarantee, you know how like Ryan was all ready to take this? You want to know? I bet it's because this was one of his favorite gap downs. The better the gap down that gets bullied, the more powerful, right? And then, yes, it's either a base breakout, 2-minute base breakout, or you can just say, you can also say it's a 5-minute buy setup. Here's our high, lower high, lower high, lower high, price compression, and then we go. Okay. Like I remember on this like LRN, right? LRN, when this was this was gapping to 2370. It might have been gapping more in the pre-market, right? That's looking like it's going to be a trend change gap. And then actually shook down, and then look at it. Exploded, right? So the better the gap down that reverse is, right, the better the gap bully. So something you want to look at. If you have something that was like a favorite gap down, bullies the gap, right? Then those are the ones you also want to look for. Okay. So let's see. I don't think the tile was all that good. There's a good amount of shock value in this. Okay. So if we're gapping to 1650, is this pro or novice? On this gap, the tile. Pro, right. If we are gapping to 1950, is it pro or novice? Novice, right. Okay. Let me give you this because let's make sure that, okay. Because I think it's very important. And I guess I'm going to use this novice as kind of like to better understand the pro. Because I think we focus on the pro so much that sometimes the novice gets lost in it. Typically the bigger the gap down, the better on the play. Yeah. I don't know. It can't be too big where it takes all day to bully the gap, but preferably, yeah. So I use the same criteria to scan for the bullies and berries that I would for the gaps. So like whatever is a significant gap on that day, it like depends on the market, is what is also going to be a significant gap, big enough gap for me. Yeah. So I would prefer small little like bullies and berries are usually less powerful. But usually it's going to come from our list of gaps anyway. So we deemed the gap up or the gap down in the first place significant already. Those are the ones I want the most, which is why I don't use a like specific gap bully, gap berry criteria, because I want it to come from the ones that we already deemed a significant gap. So I'm going to focus on that list. I'll pick them up when I run the scanner because I'll just sort them by gainers, and then like on the gap downs, I'll sort them by up the most and see. This one, I would say this is professional. It just got sold. So, okay, good. Well, this is a good question. Okay. So now when we're looking at novice gaps, okay, and you know I don't even really play them, but okay. Here's what we want to look at. Okay, let's say we're looking at let's just use the GE as example. So I'll go to bearish novice gap. Okay, so that means it's a gap up. Okay, I'll reduce this to here, and then we can put it side by side next to the GE. Okay, so GE here. Okay. Okay, so now if we want this to be a really good novice gap on the short term, we need it to be extending the short term pattern, and the gap is above a green wide range bar or over a couple average size green bar, or accelerating the uptrend. Okay, so is this gapping over wide range green bars? And we're talking about the short-term pattern. So we're looking at the last few days to a week. If there's a lot of inside days or small days, then just go ahead and look at the whole week. Like you don't need to drill down too much into, oh, this was a green bar. You know, this is, these bars are just sideways, then go ahead and look at like the last week until we actually got some movement. Yes, the answer is no. So over the last few days, are we gapping over? I would say you could have a better case for one. If it was like gapping over this bar, maybe it's a little bit more novice. I thought this gap is not novice, just a little bit too big. Okay. Now, okay, so that's the first thing. So it doesn't get a point there. So we'll rank it as far as if it were a novice gap. The stock must be gapping up to resistance. This does get a point for that. Okay. If you're going to consider this novice, it does get a point for that because it's gapping up into this overlap here. See this consolidation here? So it's gapping up into that. Yeah, I guess there's some here too. But yeah, so it is gapping up into some resistance. I would say it can get a point. Is it gapping in the direction of the long-term trend? Because with pro, we want it to gap against the long-term trend. With the novice, we want it to gap in the direction of the long-term trend. So I'll look at the MAs here, right? And so I would say, yeah, it is gapping into resistance that we already know, right? But as far as what's been happening here on the weekly, on the daily, it's been moving up recently. So I would say long-term pattern, you can give it half a point, maybe a full point. Okay, long-term pattern. Size of the gap is excessive, yes. And then I don't remember if the market was gapping up or down on this day, but this was probably gapping on its own. Okay, so let's see how this ranks. So this short-term pattern, we said for sure no, right? Location, we said, yeah, is okay. Maybe half a point for the long term. Size of the gap, yeah, I say is excessive, right? And then for relative weakness, I think this was gapping of its own news. I don't think it was the market necessarily. Oh, but here's the thing. Let's look, what was the date on that GE? Sorry, I totally forgot. For the market thing, we want it to be caused by the market. We don't want it to be gapping of its own accord. So 225 market. I don't think it was a big gap up in the market, but I could be wrong. Oh, it was. Okay, so it was a gap up in the market. So that's good. Gets a point for that. So now, all things tallied up, right, on this bearish novice gap, it's in between tier 3 and tier 2. Which, notice, I don't even really want to play it. Now, I can't deny that the GE came in. I just know that I wouldn't be looking to short it. Okay? And then I have a note here. Counter trend plays like novice gap should be played seldom, less than 10% of the time. That's for me. You don't have to have it that way. And then here's some notes. In very bullish markets, novice gap should only be played on sell setups or breakout failures. So you want it to move up first. Whenever playing counter trend, the entry should be significantly away from the moving average, right? Because we're playing back into the moving average. And then mega gaps can go either way. And I much prefer playing them on a buy setup or sell setup. These are my personal preferences, but you can see, like, I don't even have any intention of being involved in anything that is not at least a tier 2. That doesn't, only lacking in one of these. If there's any more than one of these that's questionable, I won't even consider it. Okay, I won't even rank it. This for me is still more professional than novice, but it did get sold. All right. Okay, so what did we look at here? Okay, well, we just look at here's what we looked at. All right, so we looked at the CPB, pro gap on a pullback. We looked at the FTR, pro gap is a breakout. We look at the RLGY, which did a sell setup with a breakout failure. Sorry, it's not that one. It is the one from yesterday. Breakout failure inside of a 2-minute sell setup. All right, and then we were looking at, here was the other one that I was gonna point out, was the ACADE 123. It was, oh no, not the ACADE 123, IMMU 123. Okay. That was it. IMMU 15-minute 123. I don't really play 123s all that much. I much prefer if it's a breakout, but there was a 123 on the IMMU. Wide range bar, got the volume, inside bar, and then over the inside bar. It didn't really result in much. This move had already made quite a move. You could say this is a 123 here, even though this inside bar did go up a little bit. I try to be as strict on the patterns as much as possible, because within the patterns, they pretty much cover every price movement. So, I felt, I was like on the MNK, I was like, not the MNK, the MYL, if I wanted to be more aggressive on this, I could have called this a 2-minute 123. But you can see this is already kind of leaking a little bit right down. You could say, oh, that's my stop. That's the entry. But I don't know. I try to keep it as strict as possible, especially at the open. I don't know if you guys have experienced this. If I do something as the first trade that like I know I wasn't supposed to do or was low quality or whatever, it often results in me doing more low quality stuff or like relaxing other criteria because I increase my aggressiveness when I'm down, which is not really, it's one of those like natural inclinations that only makes us dig a bigger hole. Is that when we're down, we really want to recover. So we get caught up in like, oh, if this works, that would be so good. So yeah, it's what causes people to double down as well. And like, oh, I can recover now. Yeah. So, all right. So we looked at patterns now for 15 minutes. I want to give you a chance to ask questions. Could be over the patterns. Could be over more general stuff. And then I'll try to not keep you guys too long. Okay. I don't know how these normally go. I kind of assumed an hour. Thanks, David. Yep. We're going to do reversal times. I figured an hour, but I just wanted to see if you guys didn't have questions, we can end early. If you do have questions, then that's fine. Let's use today's market and we'll look at all the reversal times. Okay. And see what happens. Usually an hour. Okay. That's kind of what I thought, but this is a good amount of time. So I always run over though on just about all the stuff I do. So it's okay if we run over. You can ask anyone in the one-on-one coaching. I don't think I've finished on time a single session. All right, reversal times. Let me open up my document. Okay, reversal times. Okay, we're going to use today's. Okay. Okay, so first 5 minutes is going to be your first, like basically flurry of stuff happens, right? So this is where like the first move gets made. People who are trading the open, right, are all involved. So pretty straightforward first 5 minutes. Okay, and then after the first 30 minutes or so, we start to get usually some kind of follow through. This actually got going after the first, still within the 6:30 or the 9:35 reversal time. Okay, so this is still, and then we came in, it tried to bounce here, stabilize, didn't happen. Okay, so now the 10 o'clock reversal time ended up not reversing anything. Okay, so if that happens, then you want to look to the 10:30 reversal time. Okay. So so we'll start first opening 5 to 10 minutes. And then it's going to be 10 o'clock, 10:30, and 11:15. So when we look at these time frames, if the 10 o'clock does not reverse the move, look to the 10:30. If the 10:30 does not reverse the move, then look to the 11:15. But what happened today? Which was the reversal time that was important? Yeah, we'll get there. Well, so I'll do the morning reversal times first, and then we'll get to the afternoon. What was the most important reversal time today? 10:30, exactly. So when we saw that the 10 o'clock one did not want, you can see it tried. That wasn't the one. Okay, go look at the 10:30 one. So if you are trying to pick the bottom and you say, okay, now it's past 10 o'clock. And so on these and the morning ones, I give them about 5 minutes either way. And then once we get past the first hour, I'll give them closer to 10 minutes either way. Because the problem is if you give 9:35 10 minutes, and then it's at 9:45, and then you give the 10 o'clock 10 minutes the other way too, there's only 5 minutes in the first 30 minutes that aren't a reversal time. So that's why I give them just 5 minutes. Okay. So now when you're thinking, oh, I'm going to pick the bottom, but we've left that 10 o'clock reversal time, right? We're at 10, 12, 10, 15, right? You realize, oh, wait, that's not a critical reversal time. Okay, now we get a reversal. What time is it? 10:28. Okay, is that 10:30 reversal time? It is, right? It was 2 minutes away. Okay. So, and then the last, after 11:15, okay, so we already got the reversal. Then we get to the 11:15, but we already got the reversal, so the 11:15 is not as significant. Okay, so we already got the reversal, so 11:15, not as significant of a reversal time now. And then once we get into lunch, that'll be the 12 o'clock. So 12 o'clock, you will typically see the most recent trend slow down. That's basically it. If the market was moving all day, all morning in one direction, then 12 o'clock is the most important one. Okay. Now, was it important for today? It was not. Why? Because we moved, we made new lows, and then we would bounce. So 12 o'clock is not that important. Okay. So then don't really, things like I said, see, it's just going to slow down a little bit until the next reverse time. Okay. So that's the morning reversal times. Okay. 9:35, 10 o'clock, 10:30, 11:15, and then 12 o'clock. All right. These first couple reversal times at the period of highest volatility. So a lot of times that's when you're going to see things get moved and reversed. After the first hour, right, you have a lot of people using different charts or different time frames, 5, 15, 30, hour, I guess. Yeah, the hour. I don't know anybody that really is going to, they might use the hourly high low as kind of like a gauge, but, and then things kind of settle down after the first hour. Okay. And then 11:15 is when European markets are going to be closing. 12 o'clock is when people go to lunch. Okay. Usually, if someone is in pain, needs to get something done, right? A lot of times they'll get it done by 12 o'clock, or they have positions they need to execute, or orders that they're trying to get filled. They get it done in the morning session. And then we just break until 1 o'clock. Okay. So yeah, a lot of time the lunchtime moves is just slop. A lot of times there's no follow through over lunch. I need to be better about that. I think one of the hard things about being on the mic going into lunch is that I want to do stuff, because I don't want to be on the mic just like talking and talking. And so I think on this PGTI triggered really, really close to lunch. It's hard. It's hard to play these at lunch. So I don't know. I'll keep an eye out for it. It's just something to be aware of. But I thought this PGTI was really good. The only thing about it is it's very, very close to lunch. Okay, so was the G-Dot that I did the other day. This wasn't an official call, but it was like, think I triggered right before I got off the mic. Here, triggered right. You see that? Triggered right. And then I said, okay, let's go to lunch. Triggered. And then right back up. I think it's going to be in I'll email someone. I think it's going to be in your customer portal. Do you guys know where the recordings usually are? If you could you let Don know? All right. And then we'll do the afternoon reversal times. All right. Okay. So, Yeah, I think it's in your customer portal. If not, I don't know if you work with like Amber or Monica or Caroline or who. You can also ask them. They should know. So I would check with them as well. Because I honestly don't have, yeah, couldn't tell you for sure. It's in the portal. Okay, thanks, North. Okay, cool. Okay, into the afternoon reversal times. Okay, so we already know today the 10:31 was the most important. Okay, and now as we hit 12 o'clock, things slow down. Okay, we've gone over that. Things get into lunch, a little bit sloppy. I don't know if, maybe this was a 15-minute sell setup. Let's see. And that would have failed maybe. Yeah. See, you don't want to really trust this lunchtime move. Plus it's really strong retracement, but still 15-minute sell setup didn't work, triggered right in almost the dead center of lunch. Okay. So middle of lunch is not the time you want to be going after stuff. All right. So now we get into the 1 to 1:30 time frame, or so 1:15 to 1:30. So there is something that I've noticed about 1 o'clock that I don't think we've ever gone over, and it's not in the manual. But I've noticed that if you have a move and you're expecting it to be an all-day trend, and these are individual symbols, so I don't know if it's for the market. I haven't tracked it for the market. For individual symbols, a lot of times 1 o'clock is the end. That all this, maybe some, the move was made and it just continued, and then they like as lunch ends, then that move finally ends. So I'm going to pull up my trade tracking here so we can look at some examples. So this is for specific stocks and not so much for the market. Market is going to wait usually around 10 sorry, it's because I'm on a different time zone. Is going to wait for 1:30. If it tries to go at 1 o'clock, typically that move doesn't follow through. Okay. So, okay. Let's look at the, okay. Well, here you go. Here's the last one. Okay. Here is the SBRA. We played this on Monday, right? Monday. Okay. Monday. We're in it. It's in a downtrend. When does the selling momentum end? Right there. Okay. Right there. What time is that? 12:55. Makes a low 1 o'clock. Never goes lower after that. Okay. So that was the most recent one. We can look. There's MTSI. There's Trox. Let's look at the Trox. Oh, Trox. Yeah, that was the long. Okay, so Trox. Trox was this one. Yeah, should be this one. Yeah, transition out. And then, I guess that one ended more at the lunchtime. Yeah, that one ended at lunch. So the SBRA. All right, so just something to be aware of that as the lunchtime ends, a lot of times the trend, the intraday trend on the specific equities, just something to be aware of. Okay, so let's go. But that's typically not, the 1 o'clock is not a significant reversal time. It's just I've noticed that 1 o'clock a lot of times puts in the end of the move. So 1:30 is most significant when you have a double bottom or a double top. So usually like in a more kind of range bound market, if it's like doing a double bottom, it's been basing, it'll find a way to go, or it'll just react at that reversal time. So this is when traders are back or algos are back on, whatever it is, like the 10:30 reversal time is usually if the market puts in a double bottom, double top or something, you'll see it go. Okay. Especially in really bullish or really bearish markets. Okay. And then when we get into the 11:15 reversal time, right, that one's significant because sometimes we do have FOMC, that move will take place. Otherwise, it's usually just continuation of the morning move, of the morning session. Okay, if there was a lunch move, then usually it will reverse the lunch move, right? And then continue the morning move. Okay, but 11:15, 2:15 to 2:30. Everything that I have on Pacific time. So I apologize if I like mix some stuff up. But yeah, so 2:15 to 2:30. It's just not this chart. This chart's supposed to help keep me when I'm moderating on East Coast time. But what's the stuff that I log, and then everything in my trading plan is on Pacific time. So 2:15 to 2:30. Continuation of the morning move. If there was a lunch move, it'll reverse the lunch move. Okay. And then the last two are gonna be the 3 o'clock and 3:30. 3 o'clock will accelerate the morning move, and then 3:30 will, if there is any kind of reverse, usually a reverse of the accelerated move. Okay, which just like settles down. So, okay, so let me go back over the afternoon ones because I think I may have made it more confusing with mentioning the wrong hours there. Okay, so at 1:30, we usually make a move that continues the morning move. If there was a move at 1 o'clock, we usually reverse that move. Okay, if there was a move at 1 o'clock, we usually reverse that move at 1:30. At 2:15, we continue the morning move. And then at 3 o'clock, we accelerate. And then at 3:30, usually it reverses that recent move. Okay. So, all right. Any questions? I think that's it for reversal times. Okay. Yeah, you're very welcome, David. So I'll give you any questions on reverse times or any other general questions is fine. Otherwise, we're done. Yeah, you're very welcome, Nancy. Probably if I just see them a lot, I think it will just be a process of like seeing them move a lot, especially if pro gaps, like say pro gaps stop working, gap bullies and gap berries don't really work, and like Climos are the only thing that are working, or novice gaps are the only thing that are working. It would be a gradual process. So I'd probably have to start to track them, see if my management makes sense for them. Because as you might notice, the gap bully, the gap pro strategy are all meant to be played in the direction of the trend. So my management is also going to be meant to be trend following. So I don't have anything that says take target at 20 MA or retracement back to any kind of 20 MA. Everything is targets and then trail in the direction of the trend. So yeah, it would have to also require me to check on the management on how I would manage, and then if that would work. So that would be the process. It would be the same process as developing a new strategy. So you would have to kind of evaluate it the same way and look to see if it's working over time, and then if your management would work. I think, yeah, that's like the thing that is hard. It's like, did it work? Did it not work? I mean, it really is kind of really dependent on your management, because yeah, like I said, like on the FTR, even if the FTR didn't like come in all morning, someone could say, well, yeah, that was a good short and it worked really well, or yeah, anything like that. So yeah, so that would be the process. Usually it has to be something that really catches my eye, and it was something that catches my eyes typically because something went climactic. So yeah, I don't know. I'm like looking at my charts. I don't have anything that like was sideways all day that didn't really want to move. Trying to think. Oh yeah, well, maybe this HRTX. Well, no, HRTX did moved a lot, just not the way that we really wanted it to. Everything on my chart is gaps anyway. So yeah, I would have to like test it against my management and then see if there's really something to be made. Like something like that AK, like, I don't know. You play this, like this strategy seemed, and I want it to be easy too. Like if I were to make a strategy out of this and make it work consistently, like out of this breakdown here, I think it'd be pretty hard. Let me look at that mid, because we did talk a little bit about the mid, and I did think it looked lower. So, I mean, let's see. Would this work really all that well? So it broke down here. So you'd have to figure out, where's your stop? Is it here? Is it here? Is it the top of the red bar? And then you'd have to figure out, okay, so where's the place that I put the stop? That's part of the management. And then based on the size of the stop, does this give me enough? Yeah, so that would be the process. But usually it has to start with something. Like it has to start with you seeing something that's like, oh, this is like really great. Like, was there anything about this that I could recognize, that I could easily pick out day in and day out, and then be able to like identify and play it? And that's after you see it just whatever work really well, you know, like, so yeah. Like, yeah, I don't mean to like pick on anyone, like, but I put this Amazon, I just want to see what happened on the Amazon, just to see base of the highs, so it stayed bullish, right? But talking about like going long this after it broke the highs, and someone may have gone for it like in the pullback or somewhere else, but when I see this to me is like, there's no money for me to be made in this. But I guarantee you there's someone out there who's going to say, oh yeah, I called the top on the Amazon. Look at that drop. Someone out there in the world is going to call this a good short, and that they scalped it right back down, and they knew it, and it never got back over. But I don't see it that way. I see this and I just see like, I don't know, I wouldn't make any money. Maybe I would be like break even. Maybe I would get shaken out in this bottoming tail. I don't know. But see, obviously I don't have, if I were just, I guess, play on my manager, depends where my stop is. So yeah, sorry. Is that sufficient enough, North, on that? So yeah. As far as putting a strategy back in. So like, yeah, I wouldn't just like say like, okay, maybe tomorrow I should just look at, should I bring the novice gaps back in? If I'm not seeing like really, really nice novice gaps, then I probably don't really need to. What was that other one that gapped up that like got sold really hard? It was like very thin. It was the MGPI, something like that. Oh yeah, MGPI. I don't know. So like if I saw something like this, I might be like, How do I find a way to short this? Okay, cool. Yeah. Good question. And when and what size and what kind of pattern works with it, kind of thing. I don't know. I wouldn't look at that as a novice cap necessarily, but I think it's also too thin. Yeah, see, it's too thin. All right, guys. Any other questions? We're gonna be done here. So yeah, hopefully you got some good eye training out of that and learned about reversal times or reinforced what you know about reversal times. All right, that will do it. All right, so we still got a couple more days of the week. Yeah, stuff has been, I think, pretty good last few days this week. So let's keep it up, okay? And I will talk to you tomorrow. All right, have a great evening, everyone. I will talk to you tomorrow. Yeah, thanks so much, guys. Hopefully you guys had a good session. Yeah. Thank you. Great. All right. Best of luck tomorrow. I'll talk to you in the room. See you then.